Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is September 28th. Again, quickly closing out the month of September, moving into October, the final quarter of the year. Today we are going to talk about an aerospace defense contractor formerly called Raytheon Technologies. It is now called RTX Corporation, but I used Raytheon Technologies because I'm sure that is what most people will recognize this company as. Let's jump right in the video and take a look. If you want to know more about this company, check them out, www.rtx.com. That's rtx.com, right? Just like the dividend ticker as well. RTX is the ticker. RTX, connecting and protecting our world every day. More than 180,000 employees across our company and its three businesses. Collins Aerospace. And what does Collins Aerospace do, right? They're autonomous operations, cabin experience. So if you've flown in an aircraft recently, you maybe have experienced some of their products and not even realized it. Connected battlefields. So they've got some technology around the defense contractors, connected ecosystems, electrified aircraft. That's pretty interesting. Integrated solutions, structural technology. So they're helping build and make sure the planes are structurally sound. Sustainability, digital and technology acceleration, right? So a lot of technology and again around the aerospace industry here. That's the Collins Aerospace. Pratt & Whitney marquee products. Pratt & Whitney is a world leader in design, manufacture, and service of aircraft engines. So there's the engines that they create. So these are the three different arms of RTX, formerly known as Raytheon Technologies, and obviously the last one here, Raytheon, and they are the defense contractor. That's their arm. Raytheon brings together the best minds, systems, and capabilities to create next-generation solutions that are smart, faster, and better than previously thought possible. Air defense, land defense, sea defense, space defense, cybersecurity, integrated air defense, strategic missile defense, advanced technology. So they are the typical defense contractor, have their hands in that industry altogether. So long as we have wars going on like the one we have against Ukraine and Russia, and as long as we have a Pentagon and a defense department, this type of company is going to be we'll call it a necessary evil here. So that is RTX. Let's jump in and look at the metrics. And they were down 1.21%. We are talking about RTX Corporation, formerly known as Raytheon Technologies, ticker RTX. They are out of the industrial sector. Closed out the day at $72 even. 52-week range as low as $71.02, as high as $104.91. So they are definitely closer to their 52-week low than their 52-week high. Average volume 7.9 billion. Today's was 8.2. You can see that volatility throughout the day, but overall from start to finish down the 1.21%. Market cap of 104.797 billion. Beta of 0.72, so they are just under the volatility of the overall market. Price to earnings ratio $19.10 per share, not terrible. EPS, earnings per share, sitting at $3.77 per share. Earnings date sometime between October 23rd and October 27th. So if you're interested in that, look for the earnings date there in that window. Forward dividend is $2.36 per year. They are a quarterly payer, and the dividend yield is 3.27%. A little tongue-tied there. $2.36 quarterly with a 3.27% dividend yield. Ex-dividend date was August 17th. Looks like they paid out on September 7th. So though it's going to be a little while, you would be in line for the next dividend payout if you were to buy them now. And Yahoo Finance has a one-year target estimate of $90.05 in the stock price. I am not affiliated with Yahoo Finance. This is just one of the sources that I like to go to for information. And I like to look into statistics. We're going to look for dividend yield theory to do that. Again, click on statistics, go down to dividends and splits. You look at their 5-year dividend yield, 2.55%. You compare it to their current 3.27%, or over here, forward annual dividend yield, 3.27%. And since it is higher, that speaks to some undervaluation on this one. And there is a significant margin of safety on this one, at least according to dividend yield theory. Low payout ratio under the 75% I look for at 59.42%. Again, I like 75% or lower. That gives them a little bit of room if there's any trouble with the business, if they want to buy back shares, which they are doing. Hint, hint, down here you can see that repurchase of capital stock. They are buying back their shares. The other thing they can do with that is pay out a dividend, which we're going to look at free cash flow, and they can make acquisitions and pay down debt. 2019, again, we're going to go into financials. A lot of good information here. You're going to look at their balance sheet, their income statement, debt to equity ratios, assets over liabilities. A lot of good information. Repurchase of stock. Free cash flow is one of them. We want growing dividends over time, and dividends are paid out of growing free cash flow, so we want to see growing free cash flow. 2019, we see 6.2 billion. 2020 down, significantly down, huge drop here. Now we did have COVID-19 here, right? So a lot of people were sitting home. There weren't a lot of wars going on. Even the wars seem to have taken a break during that time. 1.6 billion, so a big drop there. Further drop, or a big jump up from 2020. Drop from 2019, but a jump up from 2020. In 2021, 4.79 billion, and 2022, 4.3 billion here. It looks like it's about 2.2 billion to date in 2023. Overall, from 2019, we're actually seeing a decrease in free cash flow. They are repurchasing their own shares, right? So that accounts for some of this, but definitely not all of it. Well, maybe it does. So 6.2 billion there, 4.7, 151 million in shares bought back, 2.3 billion. So they are buying a significant more tranche. So maybe that is about it. So let's call it flat. Overall, we will call free cash flow flat. This repurchase of shares in 2021 to 2022 does look like it might account for some of that difference in free cash flow, and it looks like they're continuing that buying of repurchase of their shares here into 2023. So I do like that they are repurchasing shares. I would like to see a bit more growth on their free cash flow, though if they're using it, like I said, to repurchase shares, that's not terrible. Let's keep going here. I always recommend more than one source. So another source that I like is stockanalysis.com. I'm not affiliated with stockanalysis.com, just another source I like to look at. And I always recommend more than one so that you can back check the information you are getting is accurate or up to date. Some of these sites don't update as frequently as others, and some might be pushing out the wrong information. I don't think purposely, but mistakes happen. We're all human. It happens from time to time. But they call it a consensus hold. According to dividend yield theory, this one potentially is undervalued right now. If you're interested in something in this space, I mean, it might be a good time to take a look at this one. So I'd have to dig more into their financials to see why they're calling it a hold. But like I said, at least according to dividend yield theory, they are seeing some potential undervaluation on this one right now. And even their estimates here, they have a low estimate of $75. It currently sits below their lowest estimate. So if it was come back up, that would be a 4.17% increase in the stock price from where it currently sits. Average estimate of $94.67, that would be a 31.49% increase from where it currently sits. And if it happened to hit their high of $117, that would be a 62.5% increase from where it currently sits. All the while, you'd get to collect that 3.5% or 3.2% dividend yield we saw on the previous slide. So even though they're calling it a potential hold, it's currently lower than their lowest estimate. So perhaps this has not been updated recently, and whenever they did these forecasts, it was a higher stock price. But right now, and I've mentioned it before, whenever I see a stock currently lower than their lowest estimates, it is one that piques my interest at the very minimum. Now, I like to look at statistics here, look at return on equity, return on invested capital. I like 10% or better for both. So return on equity is sitting at 7.7%. That does not quite meet the 10% threshold I like, though the return on capital is above the 10% that I do like at 13%. So mixed bag here, though it's not too far off on return on equity, it is still under that 10% I like to look for. EPS growth, I like 5% or better. This is smashing that, 19.54%. So looks like they forecast over the next 5 years for their earnings per share to really, really ratchet up. And good forecast on revenue growth as well at 7.15%. So overall, this one is looking pretty interesting out of the aerospace and defense sector. If you're looking for something in that sector, I know Lockheed Martin gets all the love. But at least according to the metrics here, this one definitely looks like one that might be interesting. Obviously, you'd want to do a more deep dive into their financials. Lockheed seems to get a lot of the defense contracts. How is Raytheon doing? Are they picking up more contracts? Are they having financial issues? Might be worth more of a deep dive on this one. Now let's look at dividends to wrap this one up. Payout ratio, like we said, I think we saw 57% on the previous slide. This one's saying from Yahoo Finance, this one's saying 62.6%. Let's just call it 60%, still under the 75% that I look for. And dividend growth, decent dividend growth on this one, 7.55%. That's very, very nice dividend growth. So overall, growing dividend seems to be undervalued, at least according to dividend yield theory. Metrics look pretty good. Even if the free cash flow is flat, they are raising their dividend over time. So overall, this one is looking interesting right now. Again, I know Lockheed Martin gets all the love, but might be worth a look at this one too. 2020, see 47 cents and a fraction of a penny. May 2021, they jumped it up to 51 cents. May 2022, they jumped it up to 55 cents. And May 18th, 2023, recently, they jumped it up to 59 cents. So nice growing dividend over time. They do pay out on the March, June, September, December timeframe. Again, might be worth one taking a look at here in the aerospace defense sector. This is the Vested Interest Stock Screener. Go ahead and pause this at your leisure. This is how I set up the videos. It's also how I look at a company to see if I am interested on a high level, if it meets the metrics and it meets 5 of 8, which this one does, or 6 of 9. I think price to book, it does not quite meet price to book, though you'd want to compare it to its industry average. If it is a financial company, I really lean on this one, especially for banks. 1 being fair value, anything under 1, and price to book being undervalued. For this one, it meets the metrics where I would do a deeper dive on this one if I was interested. Might be worth throwing on your watch list, guys, and taking a look at. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button, guys. Help me get to 1,000 subscribers. Really do appreciate it. The channel continues to grow because of people like you. If you're interested in dividend growth investing, and you are on a journey to financial freedom, hit that notification bell as well so you're notified whenever we put out any new content. I'm putting out videos like this, the Stock Pick of the Day series, Monday through Thursday every week to look at a company and see if it is potentially showing value, especially with all the companies that have pulled back now. I think it's more important than ever to get in and look at as many as you can to find the value where it is out there. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to do in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. I hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest in amount comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or see the advice consulted for advisor.